All right, we're live. This is Judd's Room, PAX Group, welcoming Ira Harris for another one of our in-house conversations. All right, so let's see. What do we want to start with, guys? We want to start with
just a broad brush, Ira. Did Uncle Mario say anything this morning of importance?
No, but I would actually say it was his best press conference I can remember in many years, because he actually very low key. You could tell that there's been a lot of internal strife, but they've seemed to have worked it out. And when I have some notes if I blog tonight, I have some notes as to what he said, and to me, there's no question about what has the role given to Lagarde, and it's her official role, and she knows. And it just seems to me that they've had very high-level discussion about it, and that she is really going to push. And because she's not a banker, and is really a politician, you could say, well, she ran the IMF. I wouldn't call the IMF a bank. They like to act as a bank, but they were always an arm of the U.S. State Department, as far as I'm concerned. The groundwork has been laid. I'm really more convinced about everything I've been thinking about and saying for the last, I would say, well, certainly for the last 6 weeks in a more intense way. But this, and it's again, the theme for me, and it's, and it points to all central banks, and you really heard it today. They have no exit strategy. Again, I reiterate, they've sold the world that they have an exit strategy, but they really have no exit strategy. And as we handed off from Bernanke, who said this would be no big problem, that the stuff would just roll off as it expired, and we'd move on from there, to Yellen going, it'll be, removing the balance sheet, drinking the balance, we'll be like watching the paint dry, to Jerome Powell going, it's on autopilot. It's none of the above. The Japanese have no exit strategy. In fact, it's interesting what Japan's starting to dance around here a little bit. So they would like to start to get out of this. The Swedes overnight, they said that they're going to exit negative interest rates maybe by December, but they certainly think that this has been a mistake. So with that all in place, it gives Lagarde a running start to what I consider to be her personal dual mandate. Again, create a Eurobond, and with that, some type of fiscal harmonization of European politics. This is not easy. I mean, it's easy to say, it's difficult to do. Then lo and behold, there's an article today in the FT in which they interviewed the person who put together the German budget laws, saying that they should be pulled back because Germany now needs to embark upon extensive fiscal stimulus through the development of infrastructure. So, I mean, these are all. If you think this is happenstance and that it's, that these have nothing to do with each other, fine. But I'm not of that ilk. These things are not. This is not happenstance. They're going on a full court press here, and they'll have the world's support. Now it's just a matter: have the Germans finally realized that all that's going on under Draghi, I think they have, which is why you're seeing the pushback, is that the Germans have absolutely been entrapped in this. And that's why my theme for the next year is about exit, because when you realize that what's the exit? anybody who starts a conversation with you about global macro, you have to go to the central bank and you have to ask them, what's the exit? How do you exit this? It's to me the premier question, that coupled with the way that they treat the ECB balance sheet. But now it gets interesting. Draghi got to take a bow. He was very reserved. And that's why I thought it was a very good press conference, because he knows the cloud he's leaving under. And if Lagarde really is able to accomplish what her mission statement is, her personal mission statement, then you know what? Draghi will be able to say, see, this is what I set up. It's all being done. But again, the spotlight is, and will be on Germany, because it's the way that Germany allows them to escape from this. And that's what I took from the press conference, and I really thought it was a pretty good press conference. He provided less nonsense than usual because he didn't have to dance anymore. So that's my takeaway.
Ira, to me, how Germany behaves fiscally going forward, to a large degree, is going to be predicated on whether or not the challenges inside of China are cyclical versus secular, right? Because let's face it, Germany generates, a lot of profits from China. And then the layer to that is how quickly, China starts to make the same shit that they buy from Germany in-house.
Yeah. Well, that will be an issue. And I think if there's one thing Trump has really lit a fire under the Europeans, because they know how vulnerable. I think they were sleepwalking through this. They were happy doing business with them. There were certainly Italy at times was affected, but as long as Germany was humming and they had the loudest megaphone, everybody could tolerate it. But I think that there are now that is certainly one success that Trump has had, is that the Europeans are certainly more attuned to the negatives from China. So I'm not disagreeing with you, and that is it. When do they start mimicking? Although you know what? It's not as easy to be a Germany or Japan and basically re-engineer to a much higher quality all these different products, which is what the German and Japan miracle has been. And believe it, China's been trying to do it and trying to move up the quote-unquote quality curve. It's much easier said than done.
For sure.
So I agree with the point. I think the point is really shows a lot of foresight, and we'll get there. But not yet, and Germany's going to have to embark on certain things well before they get there, well before we get to that point.
Yeah, we were looking at some of those country ETFs. I mean, the EWG, I mean, that's the best looking thing on the board, but it's running into the 200-week moving average here, so it's stalling out.
Yeah. Which does make sense, Judd. I mean, that certainly makes perfect sense. It's for the last 6 weeks, it's had quite a move, and on a relative basis, everything else, as we kind of say, is still. So people are starting to position themselves. One of the interesting things that Draghi said today, because somebody asked him, well, do you think that you created bubbles? And he said, from the work that they've done at the ECB, and he talked so glowingly about the staff, and I'm certainly not in a position to agree or disagree, because it's not the ECB staff per se, it's more the politics of the European Union, where I struggle with. But he talked about that if there is some concern, it's in the commercial real estate market in Europe, which I thought was interesting. And he didn't want to accept responsibility for that from the ECB policies, but it was interesting. But he didn't think it's in the residential because the mortgages, and he rightfully talked about that the banks aren't as severe an issue, or the corporate debt market, because the banks play a much bigger issue, of course, in Europe in the intermediation process, and the corporate bond market is not nearly as robust as it is in the U.S. So therefore, the collateralized leveraged loans and things like that, the ECB research people really don't perceive any problem there because there's just not a big enough part of the economy. So, but I think that people are starting to position themselves going, because now I haven't done this work, but some very good technicians and smart people have talked to me about the IBEX, because they've been following my stream of thought on this, and they say, look at the IBEX, which is a Spanish stock, and that's actually maybe performing even a little bit better, and the chart pattern looks pretty robust. I can't say that. I've looked at it, but I haven't done enough work on it, but it would certainly fit the scenario.
Well, Spain itself is rolling over right now.
Okay.
So whether that's just a one-day deal where it's just getting a little toppy here, because this is another one that's had a huge run.
Yeah.
And the Italians today tried to get the ORH stops and couldn't do it above above 145, and you needed above 172.04 in the ones. So they all kind of went up there and just stopped. I mean, the interesting thing was is that the pounds got crushed. They have an ORL day going on, and so does pound yen. So that makes sense.
Yeah. With the pounds, just be careful. I think people got wrong anticipating the October 31st, and that that Johnson was doing such a good job. This was going to absolutely, take place. And now they've had to retrace their steps a little bit. So that one, the pound has been a tough trade. To me, it was easy as I talked going back with Anthony Credelli when I did the television with him. We actually, talked a lot about the euro sterling and the importance of it. And I think that was very much right on target. Now, it's a little frothy here. People rushed into it. Do I think it's going to go higher? I do, because I think that the pound has absorbed exactly what it was supposed to absorb as a free-floating currency. And when all that uncertainty existed, I think people were getting nervous. So, yeah, but it's going to be all over the place. Because people, first of all, the first side of the rally was because people were positioned so wrongly because they accept the mainstream media narrative, the mainstream media narrative, which is, gets pushed at people, and you know what? When the markets really dig under it, it's just not so crystal clear that those are going to be the binary outcomes. So, market got wrong-footed, but I'm paying attention to Europe here. Again, on a relative basis, and you and people in this room know, as I said quite clearly last week, for me to take a turn towards being long Europe versus the U.S. is quite a move for me. Now, I have a minimal position on, and it's been working very well. I was tempted to add it to it, but I'm going to wait a little bit because I want to see the way this plays out.
Yeah, and here I've got the S&P DAX up, and you can clearly see that Europe's been leading this whole show here for a while.
Yeah, I was looking at the chart this morning.
Yeah, so
very.
And Euro Pound's putting an ORH day in too, so you gotta, every day you have to see if the patterns are real.
Yeah, when I saw the way the euro currency traded today, up, down, and then while he was speaking, did people really think that they were going to announce an end or do something? I don't know what people think. Why all of a sudden, they were negative the euro. He didn't say anything that people who really follow this stuff had thought otherwise. And most of the commentators who I saw felt that way. So there was no surprise. I was surprised at the movement, but got a lot of time to play out.
Yeah, so everybody was thinking that they were going to announce some infrastructure thing, and then that.
Not that. First of all, he would never rock that boat at this time. Why? He gets to walk out of there and say, I was phenomenally successful. What I did is the whole thing is success, which he said, no, I can't tell you. And do I have any regrets? He said, I'm not going to answer that because it's silly to have regrets. So, I mean, he was actually at his best today because, again, when you're walking out and whatever he's got planned, I'm sure he'll be sitting on, 50 different boards if he doesn't just take an outright investment banking job again, at Carlisle or somebody like that, BlackRock or somebody. He'll wind up somewhere big.
Well, all right, so what were some of the other questions we had, guys? Bob wanted to know your top 3 commodity picks, or the top 3 commodities that you look for at the end of this, going into the end of this year, in the Q1 2020 for your top picks for movement.
Well, I've been watching the platinum very closely here because it had a run up over 1,000, then we came back down to 860 or so, and now for the last couple of days it's been really performing nicely. Today it's lagging. I am looking for the commodities. I'm looking for the grains to run because I don't think the U.S. crop. It's when the Chinese talk about imports, they know what's going on. And they're afraid that the U.S. crop is going to be smaller than predicted and that there's some dryness in South America. So the most important thing that they have to do is to ensure that they have enough grain going forward. So I'm watching the commodities in general. Copper's been making a move here of late, but that may be because of the political turmoil down in Chile and with Codelco saying that they're going to go out on strike. So, people are rushing to ensure that they have enough copper. But copper is interesting to me as silver because if you start to really get true infrastructure projects, bridges, everything else to go with it, mega energy projects, again, I point to ABB, right? We talked about that. Actually performing pretty nicely over the last 4 weeks. And they're heavily involved in energy-type massive projects. So I'm watching that, but that'll come with copper, too. So, yeah, I'm just watching the entire commodity pool. Do I have favorites? I like the gold because gold acts as both. It's a currency, and when people want it to be a commodity, but for me it's always a currency because it performs what a currency does, which was somebody should teach Zuckerberg what a currency is so it can actually answer the question.
An outside versatile higher day going on in gold and euro too.
Yeah, you're right. And I've watched it, and while he was speaking, I've just been trading. So I was buying some gold and selling the Swiss franc. Again, I pulled it in a little too quick, but it's been a nice, interesting player, especially the way the gold is acting. As now I got orders to buy it back somewhere. Well, I may be getting filled. So, but I do like the commodities. Of course, a lot of it is going to be how high oil goes, because the oil will be indicative of a global strengthening as much as anything. So I think if you like, they've all been down together, because really when you look at them across the board, the grains, they've all been kind of stuck in this whole mule of really doing nothing. the back and forth, and you can look at their vol pricing. But I do like the precious metals. I'm watching platinum because if you get both. The grains really interest me here because they've started rallying and they've even held the rallies even when China backs off. So that tells me that there is some real demand there. And I think, one thing I learned from all my years of trading, I've loved to trade, I really like trading the grains. Doesn't mean I make money all the time, but I've learned to like trading the grains, is that good crops always get better and bad crops always get worse. And, when you listen to the farmers, they think that the USDA numbers are way overstated, but, farmers are farmers, and they have their views about how things play out. So,
Ira, excuse me 1 second. Do you mean the quality or the production?
Both.
Okay.
Both. And and I know everybody's geared. Well, we'll get to that question. All right. So I like the commodities going forward. I do, and you can find different, and I don't mean ETFs per se, but there's different quality ad companies out there, pay a nice dividend if you're looking to make the play. Who ought to, and amazingly, Caterpillar has, stood up fairly well here. So, I know that it has its, days worth. But again, let's go back to some of the ones we've discussed over the year. I'm watching the, RSX, of course, and Judd, you posted it the other day, as I saw. It's interesting because oil's done nothing, and yet here's RSX back at almost $24 this morning.
I took a bunch off up there, Ira, this morning, just because.
Yeah, I don't blame you. I was going to do the same thing because you can't. Yeah, I know where the resistance is, and we're right up into it again. If it fails there, okay, then I'm going to be selling 22.5 rather than 20. Do I sell on my terms or do I sell on their terms? And I think you're smart because if it breaks through here, you can buy it back. The volume is good enough, and it does give you an opportunity.
Yeah, I got a weekly oscillator at 23.94. So I just took it off after I sold a bunch of my Q calls this morning on the open, and trading to make money. Forget being right.
Hey, exactly. You know what? If I can find in this crazy world of algo-driven trading, you can find things that work. I take them. You know what? I'll live to fight another day.
Yeah, I mean, and all these, these trades in the currencies, the yuan gold, ORH day going on in that. I mean, it's bullish. I mean, Angel's the one that's been all over the gold. He bought it at 1480 and sold it at 1524, and he still has a bunch.
Yeah, and I was interested that one of the large oil companies said today they're only taking euros; they're not taking dollars anymore.
Really?
It's an article in the FT. Now it's amazing that there was not one iota of discussion. But you can go find it. I read it in the FT this morning.
And is that something to do with Russia, you think?
Yeah, maybe. But you know what? Yeah, well, they're pissed about the sanctions, so they're trying to find ways to fight back against the sanctions. And hey, you know what better way is there to attack the dollar in your own way? Because now that they're convinced, it's really not a stupid play at all. Because if the Russians think that Lagarde has been given the mandate that I maintain, and they think the same thing, well, why not announce you're only taking euros? Now you get basically an option on a cheaper currency. Yeah, pay me. It's not like you're taking euros at 160, and it's been up there before. It's at 110, 111. Okay, pay me in euros. So is that a call on where they think the market is going? Maybe. You know what? These people know how to trade. They're not idiots. Some of them are idiots, but some of the central finance authority I don't have a lot of respect for. But overall, and the Russians, you can go find the article. Somebody will post it. I don't know, but I was amazed that it didn't get any discussion. That's why I thought the euro was really trying to rally this morning, because I didn't think it could possibly move on any of the central bank moves, because there was not one bit of surprise in there. Yeah, so that was out there, and again, plays kind of to the commodities. But I would start doing a lot of work because if you don't trade futures and you want to just trade them in the ETF world or equity world, do your work, because there's a lot of consolidation patterns, and if you wait for them to break out, you really may catch. If for the year you catch a 20-25% move in an equity, what's wrong with that?
Yeah, you're
What's
getting
wrong with
them
that?
all the time. You're getting them all the time. Today, Angela and I were talking about the fact they were coming back for momentum names again. And earlier they came back for Visa and MasterCard and Roku again.
Yeah.
And Microsoft.
Yeah, because it's amazing. As some other guys I know call them, it's all Momo. So whoever is on top of a momentum move, they just keep pushing and pushing and pushing, and everybody else is plugged in to follow with it. Meaning those who are trading. Okay, but then they forget about everything else. Are there other things out? I'll tell you what. I got out of some today because I paid for the play free on January 2nd of 2019, and there was a.
All right, you're fading out. Uh-oh, we might have lost Ira.
Was he in the car?
Yeah. See if he calls back in. For all you guys in Pax's room, this is Howard Green 101, 50% of the gap. That's where Caterpillar came down yesterday morning and went straight up, right to the 50% of the gap, and it went. Okay. Thanks, Michael. I'll do that when he comes back in.
That's why the low in the NASDAQ the other night at 78.10 was a good low, because that was.
I'm back.
There we go.
Hello.
Yeah.
Hello.
Yeah.
I'm back. Sorry. Okay. Well, Met can't afford cell towers. Sorry.
Oh, boy.
No, they can't.
Ira, can we go back to Christine Lagarde for a few minutes?
Sure.
Okay. Just bear with me for a second, because this is a multifaceted point that I'm having trouble with. So Christine Lagarde beat the crap out of the Greeks into austerity. Now,
wait. Step back. She didn't do it. The Germans did it. Yeah, because the Germans they set very hard, strict rules if they were going to play in this game and allowed it to be played. So she did their bidding.
Okay. All right. So then the next piece then, so then maybe she doesn't have a propensity for austerity, because I started to think to myself,
Angela, hold that for a second. You just got the daily sell stops in the Russells, you guys. That's the ORL sell stops in the Russells. I think the Midcap's doing the same thing.
Okay.
All right, go ahead. Sorry.
Okay. So what I'm trying to think through is, does Lagarde hold the line with rates, okay, and attack the European problems from the political angle, as we've talked about a few times? But if she does that, that forces, you know, France and Italy and Spain and the rest of them to tighten their budget belts. And if we let, because earlier you made the comment, well, you know, we'll let the bonds roll off. Well, if they have to tighten their belts and let the bonds roll off, where the hell do they come up with the cash to do any of these things? You know?
Here. Okay. It's a absolutely great question. And I'm not pandering to you like they do on television. It's a great question. Now, in Lagarde's first role, she was the finance minister of France. The last time France had a finance minister who favored fiscal austerity was probably 1930s, if not earlier. It's not in their DNA. It's not. She was the finance minister, which makes you a totally political animal, okay? You don't get there, and you have to know how this all works, meaning her, which she did. And not that she stayed there longer. She didn't do it, you know, and it was a difficult time to be a finance minister anywhere. You know, the world was not in a necessarily very good situation. Her strength is her politics, okay? She knows how to walk between the raindrops, like she did with the Greek bailout. That was not an easy situation. In fact, she was sent to the IMF to ensure that they would partake in this. You know, because by rules of the IMF, what are they doing bailing out Greece? Greece is part of the European Union. They're a very wealthy economy. So that told you already that things were askew. I mean, can you imagine if the IMF came to bail out California? It's preposterous. So,
Out Illinois?
well, I'm not. I try to stay far away from home. So that tells you about her. She's there for fiscal. She will get this and she'll say the question really is important because what Draghi said today, which he said at the last meeting too, was look, you need to, you know, he pointed his finger without saying Germany, but everybody knew who it was, Germany. But also those who are fiscally profligate have to get their houses in order too. Well, that's just nonsense. Because once Germany opens up the spigot, everybody else walks right down that path and goes, okay, yeah, we're in. The Italians are not known for being fiscally austere on any measure, and they've got all the issues. So they'll say, hey, the Germans, we're going in right along too. We got, yeah, well, you know what? And then you'll say maybe they'll pull out the Laffer curve and they'll grow their way out of debt. Maybe they'll hire Kudlow and bring him in so that he can teach them how to grow their way out of debt, because we know how well that works. But it'll be one of the arguments. So yeah, why not? We'll make the argument. But no, she'll open up the floodgates across the entire EU, going, this is what we have to do, you know, and they'll do it under the guise of, and she'll say, well, there'll be no more monetary stimulus. Well, no more monetary stimulus. And that's what she'll say to the Germans. There'll be no more. We'll finish this. In fact, I might even end the $20 billion, which is maybe why Draghi put it out there as a bargaining chip. And you guys really start ramping up fiscal stimulus, and then there's no need for enhanced monetary stimulus. I think that's a big part of the discussion going on, which makes that question a very good question, because you have to figure these things out. You know, this is not static. This is stuff that's fairly dynamic, and they're trying to seek some answers to. So it's a good question, but she is all about fiscal stimulus. And then the second issue, and it's not even a second issue, it's a corollary issue, which is what do we do with all the debt that's piled up on the ECB balance sheet? That's all. Because those are the two issues that she has to confront. And if you solve both of those, then even Wiedeman's speech, which I alluded to in Sunday morning's blog, if you know, and I actually talked about it with you guys when he gave the speech last week. He brings that out. He talks about increasing the political harmonization in order to get this done, which has been anathema to the ears of the Europeans. So there is definitely things changing. Will they get done? You know, listen, we fought a revolution and a civil war in this country. They've already had 2 civil wars in Europe, World War I and World War II. So now, you know, it takes them a while to solve some of these problems. But if they move to solve them, you know, big things are going to happen there. And maybe the Russians, with their announcement today, I think it was Nova, I forgot, it was one of the big, it wasn't the Gazprom, it was the other Russian energy giant who put it's in the FT. Somebody pull it up and read it. I don't have it in front of me. There are things afoot, but this is a process. If you think you're going to see this in 1 day, 1 week, 1 month, 1 year, wrong. But it's going to move markets every bit as much, or even more, than the tariff discussion with China. So that's the only reason I'm interested. And it's going to provide mega trading opportunities on so many different fronts. But we'll go from there. I hope that answers that question.
Oh, yeah, yeah.
All right. Well, I've just been flipping through charts while you've been talking, and commodity charts, currency charts, bond charts. Just trying to get a sense of what's going on. I mean, you know, yesterday for this whole thing with China, you know, they let the yuan strengthen a little bit. It's not doing anything today, and now it's actually, you know, losing everything it gained yesterday against the euro.
Yeah.
But right into support again, and I don't think it goes any farther.
Well, you know, we're here. You know, they're not looking. You know what? I still question why people think money should be pouring into the United States. You know, I roll my eyes. I go, really? You're going to embark upon some type of political quote unquote, and I use this quote unquote crisis. And I'll tell you, I'm looking to get 34-1. I'll bet $1,000, 34-1 odds that Trump doesn't run, and that's not with him, you know, being thrown out of office. That he decides not to run in 2020. I'll take 34-1 on $1,000.
Oh boy, would that sting
Yeah.
if he doesn't run.
Yeah, and you know something? The Republicans actually come up with a moderate then.
Well,
Pence.
yeah. Well, yeah, Pence. He's, you know, but he'll keep the drama going because it works for him. But that's my feeling. Again, I have a theme that I'm working on, and all this is a theme. It has no, you know what? When the narcissist turns nihilist, that's all. That's my theme. It's bubbling in my head, but nobody's set up for that. What if he does? You know, and everybody's convinced. And that's why they buy the stock market. Trump has to have a higher stock market. 9 out of 10 people I will talk to who invest. Oh no, I know Trump. He needs it to run. But what if he's not running? Does he still need it? Because we know he doesn't really care about the Republican Party.
Oh, for sure.
You know, Ira, maybe one clue would be if we suddenly start to see, or when we start to see the pace of his rallies slow down to a trickle and then maybe none.
Yeah, that's a good point. There's tells, and there are, nothing happens in a vacuum. Nothing happens in a vacuum. So it gets interesting for me, because to me, everybody's predicated, what they're doing, everything is predicated upon the fact that Trump needs a strong stock market in order to get reelected. I mean, you hear it from people who don't know anything about markets. So I have to start thinking, you know what, maybe he doesn't want to run. Maybe he doesn't want to run. He's actually speeded up things in some policies, and I listen to him, and sometimes he's more outlandish than he ever was. So, I'm beginning to think, hey, you know what? And the reason I want 34-1 is because there's a few who haven't run, but the one who was most projected to win and decided not to run, of course, was Lyndon Johnson. So, I think out of 45 presidents, only one that comes to mind, or two, that 34-1 odds is appropriate. So if anybody wants it, I'll put up my 1,000, but I want 34-1.
Oh boy.
Yeah, I've always wondered whether or not he ever expected to win anyway when he actually ran.
No, I know. I don't. I think he woke up. It was like that old joke. He woke up. He go, "What? I won? No, it can't be. I'm pulling the covers back over my head."
Yeah, no kidding. What are you kidding? They voted. I won. Oh,
yeah,
that's crazy.
Right. I've always thought that. Huh? No, this wasn't supposed to happen. This is just
that nobody came to.
Well, it was just supposed to be a thing to build my brand.
Well, that's exactly right. Exactly. That's what I've.
I had free advertising. Not that I really needed it, but it was pretty good.
That worked great.
And he'll say, "This has cost me too much," and he says all the time, "This has cost me too much being president. I can't afford this. I need to go back and run my business. Thank you." And by the way, enjoy looking at my portrait with the other 44 all the time. Thank you. Thank you. Huh?
Did you have the face of a joker? Is he gonna have that scowl on his face when they pay him?
Doesn't matter. That portrait will be hanging there.
He's right. That's right. Did you see the tweet that he put out earlier today about negative rates and the Fed is screwing them, and they need to stimulate, and they need to cut rates, and look at Europe. Holy cow.
Yep. I saw it. I saw it. I go, just can't help the fella. But some of the ones the other day were so outlandish. I go, really, come on, the ones with Turkey. Oh, wow. Painful. Really painful. Truly painful. So and maybe he'll prolong it as a payoff to Pence, because if he drags it out long, it won't give anybody else time to really ramp up to run against him. To run against Pence. It'll be easier for Pence.
So what's Pence going to do? Hand out burkas to everybody?
I don't know. He's giving a big speech tomorrow or today, right? On China?
He just did it. I don't know what he said.
Oh, did he?
Yeah, he just finished.
I didn't know exactly what time it was to be given at.
It's supposed to be 11.
Economic engagement alone won't transform China into a free society. That's one thing.
Yes.
That is never going to happen.
Yes, we know that.
Yeah.
But I will tell you this, and step back and think about this. this is already a different China than it was 30 years ago.
Sure it is.
Because China 30 years ago, Hong Kong, those students in Hong Kong, So China knows the eyes of the world on it. And those eyes of the world has changed its behavior because they may talk about Hong Kong, but they've been very reticent about actually moving into action. And if you don't think that's part of where they stand in the world and how different it is, that you have to give it due. There's no question in my mind about that. And you know what? And for those who think it's going to change overnight, like somebody like Pence it just doesn't change that fast.
Well,
it just doesn't change that fast.
Yeah.
America didn't change that fast. I got news for you. Yeah, if you were white Anglo-Saxon Protestant, life was good. But if you were a Catholic immigrant from Ireland, from Italy in the 1870s, 80s, and 90s, and if they weren't taking the land from the Indian to give to these people, how much more repressive would society have been? You know what? So, and I'm not a revisionist. I'm not Howard Zinn. I'm not making that case. But things take time. Things take time because it's so disruptive to the prevailing ruling groups that they don't move easily. You know, so, yeah, but China's made huge strides. You know, but it's not going to be the way you wish it to be, you know, just because. It just doesn't happen that way. Pence is living in a fantasy land. You know, you can talk about it, but then you know what? Then get rid of the United Nations because you can't, where you should make some changes and be able to impact China. You can't because China has a veto power. Same with Russia. So, well, that's silly. You can't really embark on any policy changes or affect nations. I mean, these are silly discussions. These are discussions meant to create a narrative in order to distract. That's the way I look at it. No more, no less. You know. Okay. Yeah. Okay. Good point. Good point.
Well, that's the thing, isn't it, Ira? Isn't that the formula for what they're doing? Whether it's the Republican, Democrat, conservative, liberal, or in the middle, or whatever, they make up these narratives in order to distract. You know, we've got record unemployment. You know, more African Americans are working than ever before. Yet, you know, everybody's working two jobs just to make what we made 20 years ago, 30 years ago. Everybody's got another side gig or another job. So yeah, that's why the unemployment figures are low. You know, there's just a lot of half-ass BS out there that is meant to confuse, distract, and keep people focused on, you know, elsewhere.
Hey, it's why Donald Trump was elected.
Of course,
you don't have to look far. You see the result, and that's not a qualitative statement. But that's why, because there is something more than the popular narrative. That's my only point with that.
Well, and that's right. That's right. The only place, and it's funny because the markets have kind of become my safe haven. The only thing that I know that tells the truth, or the only thing that I know that's going to be right at all times, is the price action. It's not going to be my opinion of the price action. It's not going to be my opinion upon you know, a piece that I read in the FT or the Journal or the Chicago Tribune for that matter. It's the markets. You know, if I want to find the truth of what is really being reported on, then I have to read blogs like yours. I have to look at Zero Hedge and try to pick out what's real and what's not. You know, Forex Factory, what's good, what's not. Bloomberg, you know, all kinds of different things. But
right, yeah, you got to go. You have to go search because you know what? As I prove over and over, nothing's handed to you.
No.
It's not handed to you. I mean, I have to sit and listen to Draghi for an hour because again, what's our strength? Context and nuance. And when I listen to it, I will search out the nuance there because they will show you. You know, they can't operate in a vacuum. They'd like to, but they can't. And they do have to show you some things because they need to affect their policies too. And if you do it in a vacuum, then it becomes too authoritarian, and somebody's going to call you to task. Even in China, they call you to task. Hey, Carrie Lam's gone. They tried to support her. She became unsupported, so they pulled her back, and they pulled the law back that they were trying to push through. So those are changes. Those are not changes that would have taken place 30 years ago, Mike Pence. And you know what? And again, when you know, times are good and they're growing and people want more freedoms, but this is not new to China. Again, my litmus test was always, does Google, I don't care about Facebook, but does Google operate freely? No. And so they pulled out. They pulled out of China because they weren't allowed to operate freely. That told me years ago what you know, but yet these same people believe, you know, you listen to CNBC and they post every statistic that China puts out. Well, what sense does it make if you've doubted the integrity of their entire system? That it's a closed system, a authoritarian system. Why would you? What do I care about their data for? I don't. You know what? And they bring out analysts who cite it like, and I know then there's firms out there that are making a lot of money because they are monitoring the electricity usage. So their data, you know, okay. Listen, there's so much data out there, you can play with things 1,000 ways and find a way to repackage them and sell them, and somebody's going to buy them. Okay. And as CNN would say when they were reporting from Iraq 2002 and 2003, well, it's better to be here reporting, even if we know we're reporting lies. You know, that's a true story, by the way. That CNN, the head of CNN, admitted in March of 2003, after Saddam Hussein who fell, that they knew that they were reporting lies and things that the government wanted them to report, but it was better to report something than nothing. Well, I'm not necessarily in that camp, so what can I say? Any other questions that we should?
All right, let me look at the. I think we got most of them. Let's see. We talked about. Somebody was asking a question about the repo operations and what type of liquidity risk that poses. And there was a follow-up question, but I don't have it written down. But yeah, there were a couple questions on the repos.
Well, and they're good questions. There's a lot being written. Okay, so they are so afraid of a spike in overnight lending rates, and maybe even 2-week lending rates, that they doubled the size of the purchases from 60 billion to 120 billion for the next short period of time, because they do not want a spike for many reasons. Because they don't want to look like they're inept. They don't want to be called on the carpet. So they want to ensure that there's plenty of liquidity in the system. And the problem is, are they going to run it? And this is a trading. Now, this is what I'm talking about now is going to be trading. They're buying, what their purchases were going to be, of course, for T-bills out to 1 year, because that's what designates a T-bill. So I'm waiting to see them, because there's going to be a shortage of T-bills because you have all these money funds and others. People like myself, I buy T-bills at auction. I'm not going to sell my T-bills out because, first of all, there's no capital gain for me, and if T-bill rates are dropping, and I've just bought a 1-year bill that paid 1.8%, and now the rates have dropped, and now I have to go replace it. Why am I going to sell you? What am I going to replace it with? And I don't want duration risk. My question is, why would you be buying anything more than a 2-year right now? I know I know insurance companies, but why would I go out on duration? Why would I further myself out here? All they're doing is adding more liquidity. Yes, okay, you might get some appreciation, but you run a hell of a lot of different types of risk here by going out. I don't want to go out on the curve. And until these curves steepen much further, and you know what? I will, say that I saw this pretty much, and now we're above some of the interesting resistance, the 200-day resistance, as I noted the other day in the blog, the 200-day on the 210. We're above there now. We're above the 200-day on the 2.5. So there are shifts going on here. It hasn't been long enough or sustained enough for me to get really excited, but we certainly have it in place. And this is pretty much as I discussed as would take place with this. It hasn't been as dynamic yet as I thought it would be. So, but these repos, and there are some very intelligent people talking about, and the Fed has been reticent, so maybe they'll do it next week's meeting to announce a permanent standing repo facility. They have not wanted to do it, so maybe we'll hear more about that. But pretty much as we've discussed in this room for quite a while, not necessarily the spikes in the repo, but that something was going to show up here somewhere, and it did, because again, this gets to the concept of the exit, and the exit has not been as easy as so many of the so-called experts predicted it would be, and it's really caused some havoc in the lending markets, and it's caused the Fed. I know it's not QE, but it's all done on the short end. It's almost like, I'm not going to bore you with Operation Twist because that goes back to the 40s, and then the Grand Accord of 1951. I hate to get pedantic, but we've been here before. We've been here, and that's my strength, is that, I looked at these things on a historical basis, so they're not things, but this is actually the reverse of it. And I think the Fed must be kind of perplexed as to why they haven't gotten a quicker steepening in the curves. It's just my sense that they're wondering, what do we have to do here? Which is, they want to see some steepening. They don't understand why the curve's flattened either. And they don't want to take responsibility for it. So they're trying to head off another round of flattening. I don't mean steepening, I mean why the curves had flattened. So interesting. So and you'll see that led to the sell-off in the dollar. By the way, now the dollar is a little stronger today, and we are now pivoting around the dollar index 200-day, and we got up almost to the 200-day on the euro, and it blinked. But let's see.
Okay, well, we had a couple of questions on any thoughts on the Brazilian ag stocks versus the U.S. ags? LND has a higher dividend than Bunge and ADM. Curious if you think the exposure is worth it.
I didn't quite hear it. What, the Brazilian ag stocks versus U.S.?
Yeah, he was looking at LND, which has a higher dividend than Bunge or ADM. Well, all the charts don't look good.
All the what?
All the charts don't look particularly good.
No, they don't. They're really stagnating here. But I'm watching them because do they not look good because the companies are really underperforming the market that badly? or is there just no focus on them? And I hate to look at things like that, but in the world in which we live in, I have to take that under consideration. That, you know what, so they haven't done anything where they're just off everybody's radar screen because everybody only comes to momentum.
Yeah. If you can't make money in it right away, they don't want to be involved in it just to tie their money up.
Right. And so, therefore, then it becomes who's aggregating stock. Do the Chinese, you know, and especially, you know, in Japan, you know, people are making it tougher for foreign investors, but the Chinese have to go the opposite way. You know, it's one of the things Pence and company have been working on is to try to get them to open up their financial system more. So so on the reciprocal, are the Chinese going to be hunting for some of these firms? Because again, they were much more highly valued 3, 4, 5 years ago. So the charts look terrible. Strictly as a technician, and the technicals keep me off of it. For that, that's why technicals are good, because otherwise I might go charging in. Nah, not happening. So, what's the better? I don't know. You got to do your work. I have the one. I like Bunge only because they have a presence in Latin America second to none, and I like that. Although Latin America suffers right now as Argentina is going through some political stresses. Chile said, you know, so it's not necessarily a great place to be. Although Mexico, as we pointed out the other day, has been pleasantly surprised. And, you know, me, I'm still waiting to get my hands back on I traded KSU really well, except that I missed the last 15%. So I've been waiting, and I had orders to buy it back at 124.5, and it didn't get down there. It got down to 125 and change. So, you know, that's my bad, and I'll go on to the next one. So,
You're going to get another chance in that because that's going to come back to the averages at some point.
Yeah, but it sure seems like it's not, you know, their earnings were good, but it's, you know, again, you know why I wanted to be in that play, not only because of the Mexico play, but I always thought that Buffett, but he never pays up for anything. But maybe somebody else is, you know, woke into it and go, you know what, and you know what, their numbers are good, and they've been doing very well, and evidently the business is robust enough. So, okay, but outside of that, you know what, I still like the copper, you know, so in the commodity sector, some of the different.
Well, we've been looking at Southern Copper, you know, and that's been a great trade.
Yeah. Glencore has been struggling here, and that's my favorite. I still hold. I mean, I really traded that. That was one of the few stocks I really traded well over the last few years, and I only did it because they were paying down debt. You know, I like companies who are involved in real businesses and are taking their earnings and paying down debt, because they ran up a lot of debt and they're doing their buyouts, which kept a lot of people off of it. One of the better analysts of that company is David Harrow at Harrison Associates. I think that's what he works for. Maybe he's changed up. But he was really one of the better analysts covering it. His name is Hero. Oh, he's a Chicago guy. And I followed it, but when they were paying down debt, and I knew people who had told me, who knew Ivan Glassenberg, who's the, you know, chairman and CEO, that he had so much of his wealth tied up in the company. And I also like companies like that, where people who know how to operate these companies have a lot of their wealth, and they're concerned about debt. So I like all of those things. So I still like that company. They have a big presence in lithium. They get themselves in trouble because they operate in some areas that are questionable areas with a lot of questionable human beings, but such is the world we live in.
Hey, Eric, can I ask you a quick question? And I'm not real sure how if it's on, but going back to the Fed's injection of liquidity into the repo market, they had to go to Congress to get an $800 billion buyout twice, right? The Treasury did. So along with the Fed. So doesn't that add up pretty quickly? Aren't we gonna be about 800 billion by Christmas?
Wait. Why are we talking about the Fed? Fed didn't have to go get anything.
No, the Treasury did, but
Your Treasury had to get. You're talking about TARP funding.
yeah, TARP funding. And doesn't this stimulus kind of equate to the same thing? Under different names,
No,
but
nope. And the Fed didn't have to do anything to do QE.
no, I know they
I'm
did.
going to quote. They didn't.
I know.
They didn't have to go get.
No, I know that's not my question. My question isn't. It's not my question. I guess my question, because I know the Fed didn't have to do anything, the Treasury did. But doesn't this injection of liquidity equate to basically the same amount, to the same thing, and it's
No.
going to count up? No. Okay, good.
No, it has nothing to do with the Treasury. What they're doing is financing the Treasury. Yeah, so it does, because as long as the Fed keeps the Treasury keeps front loading their debt offerings, which I don't understand. So they issue all these bills to finance their funding, and that's what they're doing. So they front loaded it. So yes, so the Fed had to step in to step up their purchases to ensure that on the front end. But no, not at all. Just like, again, they never went to Congress for authority for QE because, to quote Jerome Powell, they have a printing press. And their mandate, that's why they always fall back on the dual mandate. That's why they'll scream about it, because, hey, if your mandate is employment and inflation, you have to do whatever you have to do. Again, today was Draghi's last meeting. Whatever it takes. The Fed has the same mantra. They just didn't voice it as that, because what does that mean? Because there were people who were sitting in Congress at that time, and probably now, who would take great umbrage at that comment. What does that mean? What does that mean? What does that mean? But when Chuck Schumer said, "You're the only game in town," to Bernanke, when Bernanke was testifying to the Senate Banking Committee, and he made that comment, Congress basically abdicated fiscal authority and said, "Hey, do whatever you got to do." So, but they didn't go to Congress for authority. They believed that was totally under their mandate.
Under the dual
Any
mandate.
other-
So
Yeah.
I guess doesn't it equals to be the same thing? It's just a different, the printing press. So they're saving the banking system by injecting huge amounts of liquidity that are going to add up quickly.
Yeah.
And I'm
And
just
don't
trying to wrap my head around the whole thing, because again, what's the exit? What's the exit strategy?
That's right. When you really think this through, and everybody here who's desirous of, you have to think this through. And what's the exit strategy, and how is it going to impact us? And more importantly, how are we going to make money?
Well, even more importantly than that, will there be anybody left to pay us when we cash out of our positions?
Oh, they'll pay you, because you know why? They have a printing press.
That's right.
Wait. You don't laugh at that.
Right.
Don't laugh at that. That's the ultimate answer.
Exactly. Because it has to be
Scary. Who needs to meet? Who is that?
I don't know. Somebody's got the TV on.
Yeah, I'm hosting it. You need this?
No.
I can't put it.
Okay.
Somebody needs to meet out.
Judd, if you need any more, yes, I'll come back on later. But I think we covered a lot of good ground there. So.
Okay. All right. Thanks, Ira. Really appreciate it.
Yeah, no doubt. Thanks,
Okay.
Sarah.
If any questions pop up, just send them, and if we aggregate them, then I'll come back on.
Okay.
Okay. Thanks. All right.
Thanks, Sarah.